Hey, this is Director Chopra, and the reason I'm showing you this slide is simply because the CFPB, he's the director of the CFPB, is finally addressing mortgage trigger leads. Now, he testified before the U.S. Senate Committee on Banking addressing the confusion caused by mortgage trigger leads. The leads are sold by the credit bureaus, Experian, Equifax, and TransUnion, and alert third parties, all of the banks, thrifts, credit unions, insurance companies, credit card companies, that a consumer is seeking a new product and they're shopping, and it leads to a lot of confusion and privacy concerns. He acknowledged the complexity of the issue, also noting the misconception that the initial lender that pulled credit is selling that information, which is truly not the case. And he expressed a willingness to explore the solutions, even though he stated he doesn't have a lot of authority. I'm going to share with you how we can help him a little bit. Now, because the reporting company is really making that information available, it raises some concerns with the Fair Credit Reporting Act on data on the credit reports. Things like they're collecting sensitive information, not just what you're applying for. Now, it can include the location, which has its own privacy considerations, and the data he is, as quoted, is increasingly being weaponized. So they're looking at all of these data issues to figure out how they can stop some of these things to protect the public. That's all good news. Now, what we've done already, and you guys probably know that, is we have looked at this opt-out screen, which is the official consumer credit reporting industry website, and it's basically monitored and provided by the companies that are selling your information. So you've got to go on there and opt out. Once you do, if you do it online, you're opted out for 5 years, and then if you fill out a form and mail it to them, it's supposed to be for a lifetime, even though you still take a bunch of phone calls. What we also do is we have people go to the Federal Trade Commission's do not call registry and make sure that their telephone number is registered. And when you apply with us, we also send this Stop Unwanted Robocalls and Text, the consumer guide by the FCC. So we're trying to help with some of those things. In addition to doing a soft credit pull. Now, a soft credit pull is tough. It doesn't work very well. You can't get pre-approved with a soft credit pull. It basically just is a qualification that says, well, it looks like you might be able to get a loan. So a lot of lenders are going that route now. The problem with that is it doesn't give us all the information we need. We can't call a listing agent and say you have a full credit approval and with absolute certainty we know you can get the loan. So it leaves a lot of gaps that could create unwanted surprises. But it's been a way to avoid a lot of these trigger leads. Well, what has happened since then is that the credit reporting agencies are going to increase the cost of a soft credit pull and basically make it the same as a hard credit pull. So it eliminates now the need for, basically the efficacy of doing a soft credit pull or any value in it at all, because it's going to cost the same as a hard one. And so if you do a soft one, you have to turn around and do a hard one, you're doubling your costs later. In addition to that, which really makes it difficult now, is with the business down, lenders are being, like for example, Lenders One Mortgage is a cooperative that suggests charging an application fee for working with consumers to subsidize these costs. And the price increases coming in January, the cost of the soft pull being the same as the hard one. When we look at that, they legally can charge per TRID. Now, TRID is the acronym for the Truth in Lending Act and the Real Estate Settlement Procedures Act. That basically they're stating that the cost of a single borrow trimerge report is going to go up to about $50. And if it's for two people, it's going to be $100. And that's the same impact as a soft credit report. Well, that really bothers me, of course. And then we look at, so how is Fair Isaac doing? And basically, it's had a solid third quarter stock price-wise. They reported a beat and raise quarter and the meaningful outperformance on revenue margins and earnings per share relative to consensus estimates. Makes sense. They're got to be making a boatload selling your information, right? And now they're going to make even more as they're raising these prices up. Double-digit year-over-year revenue growth, reflecting the benefits of strong price realization, right? How can you help? Well, one of the things that's taken place is there's a bill to crack down on these trigger leads, and essentially it's by this guy, and it was put into place back in April, where he introduced this bill, H.R. 2656, with the sole purpose to amend the Fair Credit Reporting Act and the creation and sale of trigger leads, and for some other purposes. Now, the problem with that, when we look at this, is, let me get rid of the ad here. Currently, it only has about a 3% chance of being enacted. So there's more work that needs to be done. Just wanted to make you aware of it. Basically, there is a take or a call to action on the National Association of Mortgage Bankers, where you can click to offer your support. Where did it go here? And when you do that, it basically has this apply action right here. You throw in your address and it tells you who you need to reach out to. So I'm going to send you this in the link just so you've got it. And maybe now that it's starting to take a little bit more traction, we can increase that from 3% to 53% and get Equifax, Experian, and TransUnion to stop selling your information. All right, that's all I got for you. Hope that helps.